All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is Thursday, June 8th, 2023. Here on the YouTube channel again. Glad to have you on board. Let's go ahead and get started with Around the Horn. Here, Dow Futures down 35 points. We're going to talk a little bit about rotation, value stocks, and tech stocks. So kind of, let's just call it a class today, a little bit of macroeconomics class today. In terms of rotation of sectors. NASDAQ is up 0.24%. Again, it was the laggard yesterday. Imagine that. The NASDAQ never goes down, right? That's kind of the expectation now. S&P is flat right now, 4276. Russell pulling back slightly from yesterday's big gain, 1890. I have a 1900 level for a break on Russell. That seems to be the top end of that range. Let's see if we break it. 72.92 for crude oil, up 0.55%. $2.65 for gasoline futures, that is up as well, 0.35. Gold futures, 1974, bouncing a bit, about 15 bucks, up 0.8%. Silver, $24, up 2%. Copper futures are up as well. We need to get above $4 to really show some economic juice in terms of the global economy. The Eurozone just reported their GDP numbers. They are officially in a recession. So what does that mean for the United States or for the global economy? That remains to be seen. 107.46 for the euro dollar, up 47 pips. I guess euro recession news is bullish for that currency. 139.38 for the dollar yen. That's down about 82 pips this morning. Pound dollar, 124.84, up 46 pips. Not a lot of setups in Forex, just mainly because I'm dealing with the dollar pairs, and the dollar has been kind of just sideways. We're getting some action today, 103.67 on the dollar, but I'll keep an eye on Forex today and see if we can get a shot at something. 3.788% on the 10-year. The volatility index, the VIX, again, still relatively compressed, we know, 1406, up 0.86%. Interesting enough, the NASDAQ was red, over 1% yesterday, almost over 2% at one point. And the VIX closed red, so that's interesting. Imagine that. All right, so let's go ahead and answer a quick couple questions, if there's any. Young Danny's asking, why is Amazon outperforming so far? Well, Amazon is outperforming because we had some upgrades. We had an upgrade on Amazon. I sent this out. Wells Fargo initiates Amazon as outperform. Wells said in its initiation of Amazon that the firm sees a margin inflection sooner than investors realize. So again, Wells Fargo is bullish on Amazon. That's why you're getting the pop pre-market. We also had job claims. I went ahead and put this on the blog on Discord. Jobless claims 261,000. The forecast was 235. The market likes this, at least initially, just due to the fact that it's going to relieve a little bit of labor pressure, labor costs. So again, that's still inflationary when everyone is working. So if we get a little bit of a pullback in jobs, that's going to relieve some of the inflationary pressures because demand will fall just a little bit. But the soft landing scenario that the Fed is always talking about, or the expectation, is that we're going to get lower inflation with employment staying the same, pretty stable. Again, hence the term soft landing. It looks like we're having a soft landing now if you're based it on the stock market, sure. But there is lag effects for interest rate hikes too. You know, we've had interest rate hikes now for about a year. The longer you have higher interest rates, it's difficult for real estate developers and real estate. And that's usually your sign when there's stress in the credit system. I'm not saying there is now. I mean, you still have home prices relatively stable. And the home builders are at all-time highs, at least that. They're doing in-house financing. But really the concern is the lag effects of this. Remember the 2008 analog where you had that sore job, that bear market rally, and then Bear Stearns got bought out by JP Morgan, and then the market fell during the summer to October being the lowest point with Lehman Brothers. Now, we don't know if we have that kind of black swan event coming, so it's kind of hard to quantify that or model that because that's just a really horrible scenario. Not saying that it can't happen, but it's really hard to model a black swan situation when there really isn't any signs of it, at least at the moment. Maybe what is it, that West Coast bank, the Silicon Valley Bank, SVB, could have been the first drop in the bucket. But from what it seems now, at least seems to be contained. The Fed is pretty much on point, and Treasury is on point to just kind of put the finger in the dike to say to keep the dam from breaking in terms of water flow. Water flow being just a collapse of the regional banking system if that was the case. But we're not seeing that, so at this point, we're just gonna have to trade the way we see it. Yesterday's action will go to NASDAQ, and we're just going to kind of keep it focused on macroeconomics. Just like the title says, is it, NASDAQ, is it a retrace or a break? So let's go ahead and take a look at the NASDAQ. We're going to start first with the larger time frame here, guys. The larger time frame is really going to give us kind of a roadmap to where we're going to go. So if we're looking at a daily, it's kind of like we're flying from LA to New York, cross country, we have stops here and there. That's normal. You have stops here and there, pullbacks and such. So kind of think of that as just stops, but your destination. That's why you have your fibs and your moving average and such. So looking at this here, does it look like that we've hit any kind of resistance, at least at the moment? Sure, you could draw a couple lines to justify that. But again, if we're just going by Fibonacci retracements, not everyone uses it. That's completely fine. I always say Fibonacci retracements are like a navigation in your car. You could press the home button and it'll take you the way home. You don't need it, but it's nice. You'll get some kind of back roads or save some time from traffic, right? But it's not necessary. You know where you live. Same thing. We know where we live. We know where we're going. Really, the point of emphasis, at least on the NASDAQ, really is around 15,284. Now, that's levels not seen since April 2022, right before we started getting the inflation scare and rate hikes started really creeping in. So could this just be just one giant retrace of that level, and then we could roll over, or we finally break out, and then all-time highs becomes a conversation? The point I'm trying to make here is that you're going to get pullbacks. That's completely natural. The good news, at least when it comes to rotation, unless you're a tech call holder, is that now the RSP, which is the equal weight S&P, this is all 500 companies equally weighted. Tech is not the heavy weighted, is now breaking out. So what you're getting now is really confirmation of a bull market. Now you're getting participants. Small caps are buying, at least for now. Banks are bidding, at least for now. Energy, which was kind of the loser of the first quarter because it was just rotation into tech, that was oversold. That's what's doing well. Your OPEC cuts and such. But this is a really great chart to look at, because if RSP was down and this was just carried by tech, the NASDAQ itself, that would be a problem. That's unsustainable. That's dot-com bubble stuff. So we need other market participants. We need utilities to do better. We need healthcare to do better. And we need the staples, the value stocks to do better. It's simple as that. When everyone panicked in 2022, everyone piled into the Procter & Gamble's, the Colgates, the Coca-Colas, the PepsiCos, right? The safe stuff. And that's fair. But even the safe stuff can get overvalued at some point. PE ratios start getting really, really ballooned. Why do people do this? Because they just want to rotate into something safer, pay a dividend yield. But now you have competition when you're a high dividend company. The competition is high rates. I can get a 10-year bond or a 5-year bond or a 2-year bond paying 4%. That's double or more than double the Coca-Cola dividend without stock swings, and it's guaranteed. So now value stocks kind of have that competition. Tech stocks, at least in order to attract money, is promising growth, capital appreciation. So tech stocks are like a home that you're trying to flip. And dividend stocks, again, are buy and hold, you're collecting rent. So again, these kind of rotations, guys, is extremely healthy. I don't see any cause of concern, at least for the short term. And again, guys, you're not getting an injection of new capital yet. I know we just got the debt deal, so liquidity may have dried a little bit. That's just kind of what you got here. But for the most part, we're still in an upward trend. We're still above major moving averages. Really, the key here is 14,250. That's your support. That from the previous breakout. Again, this is what initiated the breakout last Thursday to last Friday. So what we have been noticing, at least lately, is that Friday tends to be a nice kind of bull rally. We kind of end the weeks very, very strong in terms of equities and tech. So the question is now, does the Dow carry? Now the Dow's down and NASDAQ's up. So are we going to get a re-rotation back into tech? That is possible. Or we just get a melt up altogether. What I expect is that the NASDAQ is going to start either retracing back to the previous fall level, which is 14,627, or it's going to break 14,250, which is that support. So you need to put that alert there. If that breaks, then we can start talking about 13.6, 13.8, and then we can get a crack at some stocks that may be on a discount. But we need at least some kind of a discount to invest in anything unless you're dollar cost averaging. NVIDIA, there's a good question there. NVIDIA, remember, was at $400, $419. And again, this isn't exactly bearish, but hey, we get a crack at possibly a gap fill. This is a good thing. So we want volatility from these names. It's fine. I mean, you're going to get sellers. I mean, people are going to take profit. The CEO sold some stock. So again, could we get added weakness on NVIDIA at the expense of the market? Or will we get added weakness on NVIDIA with that money going into value names, into the industrials, into the healthcare, into the financials? That's kind of something that you see in a bull market. So again, every time you see the Dow up a little higher or maybe outperform the NASDAQ, that's very healthy. What we don't want is only the NASDAQ doing all the heavy lifting. Again, only the NVIDIA doing everything. Can't have that. That's unsustainable long term. What we want, as always, for a bull market is sustained moves higher with healthy pullbacks holding support. And so far, that's what we're getting. And that's a good sign. So pretty optimistic, at least for the short term. I mean, it's been pretty choppy lately. Last week was a shortened week for the holidays. That was choppy. And now you can see ES is pretty much flat. So the question is, do we get that retrace or do we finally break, at least on the NASDAQ? Because what happens on the NASDAQ will affect the S&P just due to weight. Let's go and take a look at Boeing and Palantir. Palantir we caught yesterday. And look at that flip. We are now at 1461. So again, look at this yellow line here. I caught this for a bag for about 100%. The signal caught it for 50. I held for a little longer. Then I left a runner at 100%. And went back down to 20 and I closed it. But again, big flip. We had to get to 17.15. We had the $15 strike. We were deep in the money and we barely got 100%. That just tells you kind of the lack of players in the market right now. There's just really low liquidity, even in a high beta name like Palantir. Is this a place for us to get back in? Is, I assume, the question, Arthur. So, I mean, there's no gaps to fill here, at least in the short term. You know, 14, maybe we hold this level here around 1450 or so. That'd be pretty strong price action. Again, that's the peak from April of 2022. That got to, Palantir got to the peak of April 2022 faster than NASDAQ. So again, you can see that high beta in action. So again, that moves a little faster or more kind of a bigger swing than just the NASDAQ itself. So 1464, if you can kind of hold 1460 and then we bounce a little bit, maybe we get to like 1475, maybe we can break 15 again, we can play a next leg higher. I mean, we can hit Palantir all day relative to this gap fill at 23.91. When it comes to Boeing, headlines suck. That's just kind of the reality. And we got hit with a headline, got to 247. But you can see now we're pretty much flat, 211.93. We need to break 215. That has to happen as soon as possible because all we are doing is chopping in a zone. And the reason we got in this trade was the fact that we were breaking above the 200-week moving average. We are now having a shooting star, which is a pretty strong candle, at least on the weekly. So I hate to say this. I think we have a shot at it. But the thing is that we just may run out of time, and we bought these for last week. So imagine that. Just kind of volatility hurts both ways. So that's where we are, at least on the market. But yeah, I mean, Boeing on the weekly chart is nothing changed. Same thing with the daily. I think we're probably going to run out of time on this one just because of a headline. That's a premium killer, but we got a shot. Absolutely. And then Meta, I was up 35% on this on last week. I didn't even get a chance to close. We're trading now at 261.95. There is a trend line here at 260. So we need stocks, we need NASDAQ to bid. The problem is that when you have Meta with the headlines of the Instagram pedophilia thing, that's not helpful either. That's your headline, that's what hits. And that sucks. Let's take a look at Goog. I also have Caterpillar calls. That's why you see the quick quote here. Take a look at Goog. Looks like it's at support. Kind of very similar price action to the NASDAQ itself. This is the gap that was filled. I'll go and clear this. You can use 122 as support here. But again, just like Meta, these kind of communication services names, they got sold off yesterday. So I guess Meta wasn't just that headline with Instagram yesterday. It was more just the rotation out of that particular sector. And then names like Caterpillar benefited. And let's take a look at the daily on Caterpillar. Again, we sliced above the 100-day moving average. I have an alert at 236.49. There is a gap to fill at 240.49. Plenty of volume yesterday on Caterpillar with momentum, pretty much flat at the moment. The only problem with Caterpillar, the spreads are very wacky. They get very wide. The difference between the ask and the bid. So let's say, for example, you have a ask of $2 and you have a bid of $1.50. Right when you buy that contract, you're down 50 cents on your contract literally within seconds because the spread is so wide. And the reason the spread is so wide is just not a lot of volume just yet, just in this particular lane. When you get a name like Tesla, Apple, SPY, Qs, those spreads are very, very tight because there's a lot of volume pretty much every day. And interesting enough, the options market is really ran by around 8 or 10 companies. Very rarely do you get an ETRN or these other high beta names like a Carvana that will give some action in terms of options volume. But for the most part, think of the FANG names. Facebook, Apple, Netflix, Google. Those were that dominate the options market. So if you focus on mainly tech, but still have a couple of names on different sectors, that's going to be very helpful for you guys in your trading future, especially with options, because now you'll know what to focus on. It's better to master one thing than be good or just great at everything. Just master one at a time. But there's many options. Again, maybe you're somebody that wants to take on the market. That's totally fine. But it's my experience that I really just focused pretty much primarily like 15 names as we've traded throughout my career. And with some deviations, the GMEs of the world, the BlackBerries of the world, those names. But for the most part, it's really concentrated on just the names that the Apples, the Googles, the Amazons. Those are the meat of the options market. So it's best just to focus on them, or you can make it easy and just trade SPY and Qs forever and do it that way. But whatever works for you, like I always say, there's an ass for every seat. All right, guys, we'll leave it there. Have a great rest of your morning. We will catch you guys tomorrow for the next morning note. And for the Discord, I will check you guys on the midday meeting, which we do on the radio. Midday meeting or midday recap, either way. Have a great rest of your day, guys. We'll see you later. Cheers.